Hello everyone. In this lesson we are going to look at a rather rare chart pattern formation which is called a triple top. So here you are having a price that is trending upwards, then it hits resistance, it bounces down, then it moves up again. So at this point when it comes down, you are probably thinking this is now a double top. So for some people, they might enter here and say it's going to be a double top, so they're expecting it to continue downwards. But as it gets to this point, it forms a second triangular formation as price moves back upwards again. So you can imagine if you try to time a double top and you enter around this point as a short trade, then you're going to be frustrated because it will start to turn back and move upwards. Then you might decide to cover your short position, only to see the price go back down again and continue downwards without you. So you need to be careful when analyzing a double top and reading it as price forming a double top rather, but then it continues to make a triple top. So like a double top, a triple top you have to draw a line extending from the two triangle shapes that are in the middle. Then whenever the line is broken and price is moving upwards, then you will take the price from the top of the middle triangle to the line and you extend that same price moving downwards. That would be your profit target. For traders, they would look at entering at the break of the line. For investors, they might want to take a short position, maybe at the first instance, then they add on the second one, add on the third, then wait for price to move nicely downwards. I understand most investors, they consider themselves to be people who only enter into long trades. But I have to emphasize that as an investor, you also need to consider having short positions in your portfolio so that you can be able to make money whether price is moving upwards or downwards. This is something to consider, especially the markets that we find ourselves in here in Africa, where you find there's not sustained bull runs. Sometimes you have bull runs that are sustained for 3 weeks, then the next month or a month and a half becomes a bear market. So you always want to ensure that you give yourself an opportunity to make money as much as possible. At the opposite end of a triple top, we have got a triple bottom. The same applies. You have price in a downtrend. Then it hits resistance, turns backwards again. At some point, it turns downwards again. At this midpoint, you are now drawing a line that you are extending onto the line that forms with the first triangle to give yourself an idea what the reward would be should price break above the third triangle formation. So when it forms again, you can look at these points as areas where this here will be your buying point, then this becomes your consolidation point, and this becomes further consolidation, so that by the time moves upwards, you are looking to add one last time as it breaks this line here. Then when it breaks the line, you have set your target. And when you reach this point, you are looking at probably maybe withdrawing the capital that you have invested and leave the profits to run further or remain as what you would hold in your core portfolio, because you would know these are shares that you have bought using only profits that you have earned. Your capital, you have redeployed it elsewhere. So this is it about a triple top and a triple bottom formation. You can trade them as you see them and you can be able to profit, and you can also be able to predict where the market is moving when analyzing, so that you don't maybe exit at this point and realize, oh, there was still more opportunity to milk. You want to give yourself a chance to make as much money as possible when the opportunity comes, so that when you come to a point whereby you lose something, you're not losing, but you are gaining more, and the losses are not as amplified as the gains. Thank you. We look forward to the next lesson.